So guys, like I said, I was just in Raleigh-Durham and Charlotte the last couple of days. I love to get into the markets. It's very important to me to not only read and see what's happening on paper, but also to see what the markets themselves are doing, what's going on, what kind of revitalization are we seeing, what kind of growth are we seeing. And I saw all the classic signs that I love to see. I saw lots and lots of traffic. I saw lots and lots of excavators. I saw lots of gravel trucks on the road. I saw a lot of different things. Why Raleigh-Durham? That's our focus on our market deep dive. But it's voted the best state for business 3 years running by Forbes, 2.5% corporate tax. It's the lowest in the US. And it's home to the Triangle, which is a tech center that is really coming on. They call it RDT, which is the Raleigh-Durham Tech Center. Really a lot of tech coming in. World-class education and medical facilities. They've got a great medical complex there. A lot of research and developments going on in the medical field, which when you see that research and development, that's where a lot of new innovative things, a lot of money is flowing. And when you look at, I'm looking at things right now that are recessionary, and we're seeing a lot of stuff that's happening with that in the recession, where you're looking at where money flows. Because, I've said this often that I'd rather have a mediocre deal in a great market than a great deal in a mediocre market. Because at the end of the day, if you're going where money's flowing, it's probably being diverted from somewhere else. The more money that comes into an area, the more that it's affecting other areas, especially in things where you're seeing things constrict, you're seeing tech, pull back, you're seeing, the stock market is changing, how things are happening there. All that stuff is affecting things, but you're looking at where's the money coming from. And the Triangle is a world-leading hub for tech and research, and it's got an enormous amount of investment coming into it on a constant basis, which is leading to a booming economy. It's leading to more industrial being built, more flex space being built, more office being built. It's one of the only places in the nation that we see a lot of office still continuing to come online. You've got a population of over 2 million now, and it's growing. It's a fairly decent cost of living. I'm back in Boise, Idaho. Gas is $3.95 here. It was $3.10 there, $3.13 all over. So, that's a significant savings. That adds up to people's bottom lines. It is one of the most desirable places to live and work in the country, where you're able to do the kind of things and have the kind of things happen. So we're looking at an exceptional geographic location. It's the hub of the fastest growing region in the country. 80% of the U.S. population lives in the eastern half of the country, located between New York City and Miami. 80%. That's a lot of people. So you're in a position to make massive in-migration without people having to move very far. When you're looking at, you're moving from New York City, I always thought, well, moving from New York to Raleigh would be a long way, but it's not that far. And you're about 6 hours out of Atlanta. Atlanta is still the busiest airport in the nation right now. You're seeing a lot of really good things happen there. It's 3 hours from DC, 6 hours from Atlanta, and 6 hours from Charlotte. It's definitely a place that has a lot going for it. It's beautiful. There's a lot of rural mixed in with a lot of subdivisions coming on, a lot of new apartment complexes being built. There's just, I can't say enough about how much is going on over there. I've been in Boise, Idaho for a long time. I've seen the growth here, but when you're talking about an MSA of 2 million people, you would expand that by 2.5 times what we see here in the Boise metro area as far as construction going on. So if you're looking at, your 2021 and 2022, the net domestic migration, you can see that the Northeast which is, Pennsylvania, Maine, New York, Rhode Island, Connecticut, even New Jersey is in Massachusetts is in there. They've had a net out migration. The Midwest has also had a net out migration. The South, from West Virginia and Delaware down through Texas and Florida, has had a massive, massive in-migration of almost 2 million people over the last 2 years. But even the West, and this is where statistics will tell you this, even the West has seen a loss of over 500,000 people, but California has lost more than that. So when you see numbers like that, you can definitely see people are moving away from, areas like New York and Chicago and Wisconsin, Washington, California, and they're moving into the South. So when I add all these numbers up, I'm looking at 7, 8, 9, 10, 13, 20, 1.5 million. So this is fairly even. The people have been moving out of those areas into the Raleigh area in equal numbers. And that counts the whole South, right? All the way into Texas. Even Oklahoma is starting to see some pretty good growth right now because of, let's just call it, business-friendly environments. So Raleigh, the research triangle, really technical, right? It's not really a triangle, but they've got NC State there. They've got UNC, they've got Duke universities there. They've got a large business and research hub of over 7,000 acres, 3,000 companies that operate life science and technology, advanced manufacturing. We've got 700 international companies, and they're contained in the 3 counties of Wake, Durham, and Orange. That is very, very substantial. And when you're looking at that as 3 hours from the mountains and 2 hours from the beaches, you have a lot of things that even Southern California would struggle to match in what it offers its residents. People are moving there for huge opportunities, high diversity in the income, in the economy built on the range of industries. I saw a very low cost of living. Houses were 15% cheaper than here in Boise. And there were lots of them. There was a fairly good supply. A lot of large national builders were in there doing a lot of big projects, which allows for people to have choices, people to see new communities coming on and everything like that. A very young population, a lot of young professionals in there, world-class education. I mean, Duke University is good. NC State, they always make the final, basketball tournaments and stuff like that. They've got the Carolina Hurricanes. They're 2 hours from the coast, 3 hours from the mountains. And they really do have an amazing quality of life with the outdoors and everything there. A lot of green walking paths, a lot of thought and consideration because, as I'll show you later in the slideshow, it's a fairly new boom in growth. They've seen tremendous growth over the last 15 years, which has allowed for advanced city planning. There's a lot of old historic parts in there. I kept running into quaint little town centers and things like that were dating from the 20s and the 30s. But you have lots of vibrant new apartments and industrial projects and things, tech centers and things like that really brought a lot of that life to it that kept it feeling cutting edge, kept it feeling fresh, and 16 institutions for higher education. So you've got a lot of people that are going to go to college and wind up staying because they wind up employed in the area, or they wind up spending 4 years there and fall in love with it, right? But like I said, here's a 92% population growth in 19 years. That is amazing. You've also got an average median age of 37 years old, which is very young. And 73% of the population is between 18 and 64. 64 people move to the region every single day. That's a lot of moving trucks. That's a lot of things happening. That's a lot of jobs being created. But you can see in 1980, they were only about 560,000 people. And in 10 years, they grew by about 200,000 people. That's sustainable. That's not something you're going to notice. That's 20,000 people a year. That's 3%. That's 5%, 5% of 500,000. Yeah, it'd be 25,000. So you didn't see a ton, but then you start to see in the upticks in 2000, 2010. I mean, you had 800,000 people move in, which is almost 10% population growth. And then between, 10 and 20, it slowed. But between 20 and 30, it started to pick back up. So they estimate 2.7 million people by 2030, which means that they are going to create 600,000 more residents, places of business, places of work, the ancillary jobs and everything that's going to come with that. And so you've got 65 people a day moving into an area that is already facing constraints, but it has a very young population. So all of those are very, very good. There's 883 households. I don't know exactly how they count that. But the average per capita income is 42,000, which is 10% higher than the national average. And again, guys, we're providing these statistics and we're providing this information so that you can look at the market as a whole and understand why a great market looks so fantastic, why it is so strong in what it's doing. So if it's providing a 10% higher than national average per person, per capita income, that's spread over men, women, children, retired people. It's covering the whole demographic and it's not partial. And so you're looking at your household income is 20% higher than the national average. And then when you combine that with having the higher than national average, but a low cost of living. I mean, fuel is, 18, 20% cheaper there than here in Boise. And their household income is higher than ours. So there is more discretionary income. Median housing cost of $375 in Canyon County in the Boise greater MSA. Housing prices is $425, $435. And so you're seeing a big difference there. You're also looking at 92% have a high school diploma or higher. That is a significant amount. 47% have a bachelor's degree. So all of this speaks to more of a white collar town, more of a town that's headed the direction of, I use the word gentrification, but I don't know that that's the right word, but you're heading toward a per capita that is more educated, that has more disposable income, which means they've got more money for, restaurants and activities and outdoor sports and, all of those kinds of things. And so it's continuing to attract a lot of people based on that desire for everyone to have that kind of time and that kind of money at the same time, which is a very important thing that a lot of per capita places, including Boise, right now struggle with, because yes, it is a great place to live here in Boise, but the cost of living is creeping up ever steadily. And the average person is struggling because, the per capita income is not as high as some of the areas like this. So, Raleigh-Durham Airport was a brand new facility. They have two terminals. One is they didn't add on. They just created a new terminal. It's very nice, very efficient. But they've also built it in a way that allows for growth. They're going back to Terminal 1. They're going to expand Terminal 1. But they've seen a 55% increase in traffic. I was able to catch a nonstop flight to Salt Lake City. I can catch a nonstop out of there to Phoenix, to Los Angeles, to New York, Miami, Tampa, Dallas. There's a lot. It's becoming quite the hub for the nonstop destinations. If you look, there's 7 international destinations and 65 nonstop destinations across the U.S. So they've got a pretty decent rail system for bringing in goods. A lot of that is coming from the shipping ports of Jacksonville, and even some of this stuff coming in from Houston, the ports there. So it's halfway between New York and Miami, and that's really creating a great geographic area because it's a midpoint for distribution of goods and services. So a lot of things are being shipped in, final assembly, things like that. There's a lot of tech companies that are looking at this as a location where they can be close to their manufacturing, they can be close to the assembly of their product, and go from there. It is pro-business. We love pro-business places, right? One of the things I love a lot about Boise, Idaho is I can take and I can get an approval through city council, which we recently did on a 200-unit apartment complex and a rezone on a conditional use permit in about 3 months. That is very, very attractive to developers, for people that are wanting to do some of these projects. I was talking to another developer the other day, and he's been 4 years on a project in New York City, still does not have final approval, and thinks he's running out of cash before he actually gets to what he was wanting. This is not that way. You've got the smallest union labor force. This isn't a comment on whether or not you think unions are good, but unions are more expensive. And so a small union force speaks to a dynamic growing population where a lot of people are employed. Unions usually come in and organize after you wind up in a situation that you are, you're starting to see people that are, becoming disgruntled. They're not able to get the jobs that they want. They're having to have other people come in and negotiate for them to be able to get the kind of wage that's necessary to live. You're not seeing that. Strong labor supply across all industries, high access to capital. When you look at where capital flows, it flows, top line from medical, second is tech, and then you've got construction for third, which access to technology, innovations, lowest corporate tax rate in the United States, and lowest state and business tax burden in the U.S., according to Ernst & Young in 2021. And it's the third lowest tax rate for mature corporations, and the seventh over this place. And I really am, because after spending several days there, I was really able to see what's going on. But the total tax, income, property, sales, license, look, a 3% sales tax. It's 15th in the nation, with Alaska being the lowest, and Washington State being the highest on the individual tax burden scale. It's even got less tax involved in it than my beloved state of Idaho. So these are all very, very, very good things that, are helping businesses thrive. And when businesses thrive, you wind up with a lot of great things and a lot of money and things moving into the area. Property tax is 2.8%. It is very low. And that's great for homeowners. That's great for landlords. That's great for opportunities, because you're not having to give up a lot of your bottom line to the property taxes that in most situations with buildings, with investors, unless you're in a triple net situation, your property taxes, when they go up and you're struggling to acclimate to that, you can only move your top line rents as far as the market will allow. That's dictated by outside forces, other people, other things. Has really nothing to do with you or what you want for rents. And so a low property tax base is it's incredible. Again, you look at some of the usual suspects up here. Alabama, Tennessee, and Arkansas all have lower property taxes, but not by a whole lot. You're going from 1.5% to 2.08. Boise is about 2.4, I believe, is where we're at with our levy on our property taxes for both state, county, and municipalities. Average housing costs. Washington, D.C., $2,200, a $600,000 house. Denver is $525,000 or $1,400 rent. San Francisco, 1.3 million, right? New York, 799,000. So when Durham rings in at 305 and Raleigh at 341, that rivals places like Atlanta. But as you'll see later, there's a lot of statistics in here with the crime and education levels that really make it one of the most attractive places as far as price point. That also has an education level that tends to give itself to higher salaries. So when you combine all those things, guys, this is again, this is from the Zumper report from 2020. So it's pretty current information. Let's talk about higher education. I'm a big Boise State fan, as y'all know, but Duke's got 16,000 students, but they spent $1.2 billion on research last year or in 2020. That is a massive amount. And then a lot of that comes from endowments. It comes from, companies being a part of that, being a part of the research facility. That is amazing because when you've got $1.2 billion being spent on research, that's a lot of undergrad programs. That's a lot of postgraduate programs. You're seeing a lot of that come from outside influence on very smart people operating in the area, but those people tend to stay. Those researchers tend to stay, which is adding to the population in a white collar demographic that's bringing higher end jobs, it's bringing stability, and it's also bringing a lot of money behind it. 1.2 billion in research. So University of North Carolina at Chapel Hill has got 30,000 students. I think that's getting close to the size of Boise State. I think Boise State's about 25,000, 27,000. It's the number one school of public health. And then NC State's 36,000 students. It's the number one in startups launched among public universities without a medical school. There's a few conditions in there: public university without a medical school. But startups, man, when you look at recessions and you look at numbers behind recessions, you can see that during recessions, there are more new businesses started than any other time in history. A lot of people take their severance package. They take their disgruntled employment elsewhere. They start their business and they move on with life. But new businesses bring new life. They've got business taxes. They've got business expenditures. They've got startup costs. All of those mean that there's a lot of money flowing in and around that economy. All of this stuff is excellent news because, the more money that's fluid in an economy, as we saw in 2008, when the economics locked up and money was not available, it was not as fluid as it used to be for getting loans, for buying products, things like that. We saw a real hurt put on local economies in the nation and eventually the world as a whole. But you've got 151,000 students enrolled in higher education. It's the fourth highest concentration of PhDs in the country. And it's got 2.9 billion in annual R&D expenditures, almost half of that coming out of Duke University alone. And when you look at Duke University, it only has about 16,000 students. It's a very high concentration. And then again, like we'd said earlier, 47% of the population has a bachelor's degree or higher. Money in the region. 3.4 billion raised last year in entrepreneurs raising equity for funding of their businesses in real estate. And a lot of that went into clean tech. Tech as a whole took down 2.6 of that. Life sciences went in for $500 million. Advanced manufacturing and materials, another $136 million. None of these are small indicators. And 67% of the deals made in North Carolina occurred inside the triangle, inside those three counties that we talked about. And that is a tremendous concentration when you really look at it. And that is concentrated on the cities of Raleigh and Durham. So 31,000 patents were awarded in the Research Triangle since 2013. Again, a lot of smart people. There's not a lot of patents coming out of my office. It's just not what we do in construction. And so when you see all of that kind of stuff, that's going to be, now we've got a patent, now we've got a facility to build, we've got a process to do, we've got a technology we're going to launch. All of those things speak of more and more jobs and more growth. So when we look at regional comparison, the cost of doing business on the outside, no surprise, New York City is the highest for cost of doing business, followed very closely by San Francisco. And you've got Boston, Washington, D.C. The thing that I want to point out here, guys, is if you look at cities and states that have regulation, like we talked about, one of the 5th best places to grow a business because of regulation. When I look at this, the more regulated, the more costly, and the more costly and the more regulated, the slower things happen. And so when you look at the fact that Raleigh-Durham is leading these top marketplaces, even Austin, Texas, where Elon Musk took Tesla, is still more heavily regulated and has a higher cost of doing business than Raleigh-Durham area. So very, very strong indicators, very, very good things. And then, Class A office space rental rates. So again, New York City and San Francisco. I think San Francisco's rates are going to be adjusting very, very soon, and they're going to be going down dramatically from the exodus that we've seen. I saw a statistic the other day that San Francisco cell traffic, just the amount of calls going in and out of and around from cell phones in the San Francisco area, is down 30%. That means that 30% of the people that were there making phone calls are gone. They're not there. Raleigh-Durham is right there with some of the lowest cost office product out there, almost by at least a third over where you're at with the next closest, which is Austin, Texas. And when you hear people talk about Austin, we constantly hear that Austin is overgrown. It's struggling to stay current with its demands, and things are getting outpriced from what regular folks can afford, because you're seeing a lot of that is just driven by a very short supply and a lot of people moving in. But Raleigh, with its robust workforce and regulations in that area, they've been able to manage to stay very, very busy and keep a lot of that growth happening to make everything better. So healthcare, again, we've talked about the medical in the area. Duke is consistently rated as one of the best hospitals in the United States. It's getting kind of the same reputation that the Mayo Clinic has gotten. But they've got a children's hospital, regular hospital, medical center, Duke Regional, Person Memorial Hospital, and then Durham Surgery Center. So lots going on there. Employs 11,000 people directly. So you're going to think of doctors, nurses, surgical techs, all of those kinds of things. That's a pretty significant amount just inside the Duke University facilities. So again, leading edge, cutting edge, and better demographics and dollars on point for what's happening in the area. Excuse me. You've also got world-class research facilities that are also top employers that employ another 33,000 people. And you've got a list of them here that are from the University of North Carolina that are part of that. And then when we look at investments that are happening in the area right now, Wolf Speed has announced an 1,800-acre, $5 billion investment that will create 1,800 jobs. And you have to think about it. When you're a semiconductor producer, we have that with Micron here in Boise. That's a very automated job. There's not a whole lot that the people have to do. You're not cutting the silicone wafers or that kind of stuff. And so you're really automated in that, yet they're still going to employ 1,800 people in that. And they their current facility is already the world's largest. And this particular investment will 10x their productivity. They're going to inject 17.5 billion into North Carolina over the next 20 years. That is a massive boon when you look at 1.2 billion in tech research or in research and grants coming out of Duke. That's almost 15 times that coming into that marketplace. So lots of very, very good things going on there. Google has picked Raleigh as the place to open an engineering hub. That is starting to happen. They've already done a lot, and that'll create about 1,000 jobs in the area. And again, Google jobs are very good jobs. They pay well. They're not your run-of-the-mill tech job. They're considered some of the best. Their VP of engineering said that we need the most talented team possible, and the Triangle has some of the best and brightest engineers in the world. You look at the schooling, you look at what people are doing there, you look at the internships, and you can understand that statement very, very directly. So when you look at other investments in the area, Apple is investing $1 billion in an East Coast 1 million square foot campus. For those of you looking to do the math, that's $10,000 a square foot. That's a lot. Actually, sorry, $1,000 a square foot to build that. That is expensive. The average salary is $188,000. So when you look at 3,000 jobs being created and tossed into a pool of an $80,000 or a $42,000 average median income, you're really going to disrupt that. And they're also offering a $1.2 billion incentive package that has been offered by the state to attract Apple. They will also continue to invest more than $100 million into the schools and education. Again, the best and the brightest continuing to create more of that environment that fosters the best and the brightest. Eli Lilly has announced the plans to invest an additional $450 million into the area in their current investments already top 1.7 billion. So they're going to create at least another 100 jobs. The factory will produce their groundbreaking technology products for dealing with diabetes. I'm sure you've all heard about what's going on with Lilly and their new diabetic medications. Meta has a significant investment in downtown. That is always positive. I noticed the address 100 Hacker Way. I thought that was kind of funny. But here's some other companies: Microsoft, Epic Games. I was right by the Epic Games facility. It's massive. They've got a lot of really great stuff going on there. FHI 360. They're a science tech company. WakeMed, TSG, and Wells Fargo, First Citizen Bank. Let's talk about industrial. To me, industrial speaks to a well-rounded community. If you've got white collar and blue collar coexisting, there's a lot that has to happen there. But they're looking at almost 2.5% growth in the warehouse market graph. But the thing is that I look at is if you look at direct absorption, it's down around 1.4%. And the new supply is 2.4%, and the direct vacancy is climbing. And so this is a good thing, in my opinion, because when markets go through, if you look at, 21, we had direct absorption. They sucked up everything out of the market in Q2 of 21. And then you had not a whole lot going on. Now builders and developers have gotten behind it. They're coming up with some great numbers in Q3 of 22. Demand slightly outpaced new supply, but since then, you've seen new supply, which is about what happens there, about 7 months, 9 months behind. You've seen new supply outpace demand, which is going to create a little bit of a softening in the market. It's going to create the appeal of maybe a deal. Hey, this deal worked for us at $8 a foot. Now it's 9. We can't do that. With the softening in the market, you'll start to see more deals get made. And I think you'll swing back to where in quarter 3 and 4 of 23, this chart would probably look like demand of direct absorption and new supply hitting an equilibrium and being able to come more back in line. We saw, and again, when you look at quarter 2 of 21, you saw that we had direct absorption way outstripping demand, and you saw warehouse rates go as high as $10. And now you're seeing that come down back into that sub $7 a foot range. Oh, excuse me. Forgive me. I did get in from Raleigh-Durham last night about 1 o'clock. So, availability of industrial. You got general warehouse, but you've got, look at the R&D. R&D has come way up. There's been a huge investment in this R&D space that now creates 14% of the vacancy is in R&D, 13% is in distribution, and 1.3% vacancy in manufacturing. So, as you see this looks like spaghetti here, but you see where, product types intersect, they become overbuilt, they're underbuilt. In 2002 and 2003, you can see that there was literally no R&D space available. That peaked with about 10% in 04. It's been as high as 6 and 7% in the first part of 18, but then plummeted in 20. And so you can see that as you see these vacancies, you're starting to see deals being made, right? I mean, and we saw this in the retail housing market where, everybody's bidding, and people are getting tired of bidding. They're getting tired of competing for stuff. And so they've started to see where now that's not so much competition. They can get what they want. They can do the things that are necessary to position their companies in the right place with long-term leases. And so this will be, I think, another indicator that a lot's being done there and it's getting stronger, even though the vacancies are climbing. The industrial market still remains strong. The average rent rate is expected to increase as availability remains fairly low and a market as an overall whole. Concessions are expected to remain flat over the next 12 months. The remaining space available in the market, large blocks are the most common, with spaces smaller than 100,000 square feet being few. Those of you that know me, I love the incubator space, so I'm going to fly right under the radar there. I'm going to be in great shape. But 100,000 square feet, think about that. That is a building that is 1,000 by 1,000. That is a big building. That is literally 3 football fields long by 3 football fields wide. That is incredible. And there's also a large number of spec developments in the pipeline that will sustain a very competitive market, again, allowing more people to move in, because when supply is outstripped by demand, you wind up in situations where you now have, prices get too high and people start looking at other areas. So when I see that market equilibrium happening and I see rents coming back down from, the $10, $11 range into the $7 range, I see that as very affordable. It's also going to continue to be a draw for people moving into the market and coming to it. So the multifamily, you can see here the occupancy rate has come down to 94, trending toward 93%, which, as we know, I got to refresh this here real quick. As we know, those kind of numbers are not bad. Those kind of numbers are very good, because it means that there's balance. It means that properties are getting absorbed at a replicatable price. So when you look at that you don't want to be high-sided where you've got a 97% occupancy for a long time. But the 3-year average is 95% with demand staying strong, which means that the price point is affordable. And when I mean affordable, it's definitely not as inexpensive as it was several years back, but it's affordable because people are still absorbing it, and that equilibrium is going to continue to be there. The other thing you look at is if you look at the rent growth, rent growth has grown by about 5% in 22, but we saw 24%, 23% rent growth in 21. But if you look at this looks very much like what our models look like and what we expect to have. We would like to have 3 to 4 to 5% rent growth. I mean, I'm not saying I don't want 15% rent growth, but that's not sustainable. And when you see that, what goes up must come down. So you saw rent prices rise by 24%, 23%. And in that same period of time, you started to see pricing and rental occupancy fall. So now they're getting that back into equilibrium, maybe some concessions, some lower price points on some rents, those kinds of things that get that back in line, again, helping to keep it affordable. 71,000 units have been constructed over the last 10 years, and 25,000 units are currently under construction. So what that tells me is in the life cycle of, let's call it a 3-year project based on typical duration of a multifamily project, we've got a third of the units currently in the pipeline, somewhere along in the pipeline, under the construction process. And 1/3 at 3 years, that's 9 years. So you're not out of whack. I know that this statistically sounds that we built 71,000 and now we've got 25,000 that are going to be done, but that's not all this year. That is typically, for a large scale multifamily, it's a 3-year build process. And so you're seeing that with the growth in the region combined with the levels of business investment, there is a strong confidence that this can be absorbed, even though you're seeing 14% under construction and a inventory change that is also dramatic. You're also looking at absorption rates that haven't gotten out of hand with vacancies in the 80s that we've seen in some of the other markets when things become scarce, and you've got it going the other way as well with job growth going the opposite direction. So Class A, B, and C, there's not a whole lot of D class in the area because of the newness of it. Again, back in 1980, there's only 800,000 people in the area, or 560,000, I'm sorry. Concessions are at 4% on Class A. There's been a lot more Class A built than Class B. But your concession values are less than $80, right? Your rents are $2 in the Class A, $1.55 in the Class B, very similar to where we are here. And the year-over-year change is that the occupancy levels have dropped less than 0.5% in the top areas. The other thing that's funny to see, and I don't have the slide in here, but the units have gotten smaller, which means that the cities are wanting higher density, allowing for better projects. So high growth, lots and lots and lots of growth going on, huge growth going on. Tech and research hubs, a lot of corporate names, a lot of big firms that will continue to ingest or invest money into the area to be ingested into the economy in a time when things may look scarier elsewhere. But they're also, corporations that are in a lot of cases run by bean counters that look at where everything is at. Lowest state tax in the country for businesses, large incentives offered by the North Carolina government, and it is a fantastic place to invest. I came back with several opportunities on my desk that we are going to be evaluating, and it is a very strong market that I think, regardless of where you are at and what you're looking at, you're going to be able to see a good, solid 3 to 5 to 7% growth in your asset portfolio during that time period. So if you want to know more about hot markets, we're going to continue our study on July 11th with the Phoenix market and how we go through that. And then also, guys, if you want to sign up for that, Isaac's going to throw that in the chat, the webinar link for that, so you can get that if you can't grab that QR code. And so I was scolded last time for hopping off the call early, but I do want to open it up for questions. If you guys want to throw your questions in the chat or the Q&A, we can do our best to answer those and see what we can come up with as far as making sure I get the right answers done here. So, we'll give it a minute here. And I want to say thank you guys for coming. If you want more information on us and the deals and the things we're doing, definitely go to shannonrobnet.com. You can get access to all the stuff we've got going on, projects that we have currently under construction, the things that are coming up, the current offerings that we have that we're in the process of raising funds for to invest. But definitely Raleigh-Durham will be on our radar as a strong market to be investing in over the next couple of years. So we'll give it a couple more minutes here for people to ask questions. Hopefully the lack of questions means that I just nailed it and everything was awesome. Guys, I'd love your feedback. If you've got feedback on these things that you want to see, things that you're questioning, that you're not getting answers to, would love to know more about what your thoughts are on that. If you want to send either Christy or I or info@shannonrobnet.com with your thoughts, we would appreciate that. Since we still don't have any questions, I'm going to take that as a huge win. I'm going to thank you guys for showing up to our Raleigh-Durham market study. Don't forget, July 11th at 2 p.m. Mountain Standard Time, we are going to dive into the Phoenix market, another great market, but one that a lot of people are having some questions on. So until then, guys, thanks for tuning in. We'll see you soon.